Good morning, everyone. Welcome to the Eurotrade session. I am Marcus Stalker D, aka Deeyana Angelo. If you're here for the first time, welcome, first and foremost. I've been trading for about 18 years now, so nearly 2 decades, specializing in some of the more unusual products. Now, 13 years out of the 18 years, I have been kicking around prop firms. So I started many moons ago when things were rather different. Let's have a look at what we have today on copper. I do know that this title says Jerome, but that's from yesterday. So somebody was obviously creating the title, and they probably just copied it over from yesterday. Jerome is on Wednesdays. Jerome is on Wednesdays, so we're going to see exactly what copper wants to do today. I've been looking at some of the open interest developments and also the fact that we kind of started rolling into July, skipping June. That's not unusual for metals, by the way. But yeah, so we're going to see whether we can figure out what copper wants to do. Obviously, it's been on a pretty strong uptrend recently due to the tariff news. Is it time to maybe have a bit of a pullback? Maybe. Although I'm not going to be biased. I'm not going to come into the whole day and just go, yeah, we'll sell copper. I want to see what they want to do with it. Right now, signs are a little bit messed up. We do have a very small initial balance, but yeah, I need to keep in mind that the rollover is definitely on the way, so we don't want to be caught in quieter days as a result of the rollover. Okay. Wizard TP says, hey D, I passed my first evaluation today via Dakota's team. Well done, Wizard TP. That's very good to hear. Congratulations. That's very good. Now, please keep it sensible in the new XFA, okay? We don't want to see anyone blowing out in 1 day or 2 days, which is something that we have been seeing quite a bit. Yeah, so just, put some shackles on you. Save yourself from yourself. And then, be sure to start that XFA very slowly. Be more selective and all of that good stuff. So let's see if we can actually get you into profits and not blowing up. That is the whole point of guiding you through the VIP sessions. We're actually starting another season now. If you are looking to join the VIP, then keep an eye out during the broadcast, the main broadcast, for that link to sign up. We're also doing things like Top Quiz, where you can get an extra entry from winning Top Quiz and all of that good stuff. All right, so very small initial balance on copper. So let's zoom out. Let's turn into an eagle and see what we have on the daily chart. I was talking about this low volume area yesterday, wasn't I? This one here. Or was it 2 days ago? I don't know. The time is just, all of the days are just blending into one. Yeah, so the low volume area, I said we could move quickly through it or away from it, which is what you expect to see when you run into an LVN. That's exactly what we're seeing here now. We got up there, hit a smaller supply area that was pretty strong, along with the LVN, and promptly ran away from it, scurried back the other way, right? So we're going to see whether that might continue. So that's the only reason why I'm kind of just a little bit on the short side. But again, keeping my eyes open, keeping my mind open for both sides of the picture, of the story. I like to look at the price action developments as a story, kind of like a symphony, with different instruments all having their own place in my methodology, right? of course, I was a musician for a long time. So what do we have? We have a bit of an expansion of the range here after the Asia trading. Asia didn't give it some mad trend. In fact, I would argue this is pretty muted. So not too much to glean from there. On the profile, wow, that's loud. On the profile, we are opening below value. Who's we? Copper is opening below value with a little bit of a gap down. Now that could bring a potential for my first hypo, mean reversion up. So basically going back where it came from. Let's put that down. So hypothesis 1. Now sometimes if you are looking at a setup, sometimes it's not playable. You know, it might be happening in front of you, but maybe the candle that, you know, did the breakout was too big. Maybe you know, maybe it was too quick for you to catch. You know, maybe some things weren't as clear. Maybe you have a tape bomb or something. Now, if we ever get it back up to the value low, I would be interested in value low reversal. So maybe somewhere between the value low and GEX2 area. Value acceptance would be a little bit too late at that point. So even if that happens, I wouldn't be really interested in that. Now, if we end up not even being able to sustain above the initial balance, because if you see this little rectangle on my chart, the red one, that's initial balance. So if we manage to go below it, so below this put support area, we might have possibility for something that I call an asymmetrical neutral day down. And if we get to COMEX and we're still a little bit quiet or not really doing much, this whole idea might change drastically, because we will have the value areas completely different. Now, for the COMEX session, I did notice something on my other charts where I have all these profiles plotted automatically. This is the TPO profile with my indicators. But basically, there's an overlap of the two values. Whenever you get an overlap of the two value areas from the RTH session, from the main session, it can mean a change of sentiment. So again, it's something that we call the bracketing market. The bracketing market. Kind of like a range bound market, but for some reason, profile traders decided to call that a bracket. But it kind of means a very similar thing, except you're not looking at necessarily just the price action, but you're actually looking at the location and the distance between the value areas for those given sessions. And when they start to overlap, I mean, usually after 3 days of overlapping values, you need to wonder whether that's a distribution of some sort, and we might be looking at a liquidation. So all of that is kind of playing on my mind whilst I'm looking at a potential mean reversion upside, because, you know, the larger time frame picture kind of doesn't match that. So I might be a little bit careful going longs and maybe a little bit more sizing up going short. I do like to adjust my position sizing slightly, so not massively, but just slightly, in light of how strong or how weak the setup looks, right? So yeah, if we get to COMEX, obviously all of these hypos will be quite different, because we might open inside value, and in that case, any sort of momentum kind of plays, which is basically what I have here, might be not suitable for that type of a day. So yeah, but let's leave these hypos here just for a reminder. Whenever I'm doing these, I have some pretty clear orientation points in my mind. Obviously, I use about 3 or 4 different pillars, you know, concepts, cornerstones, if you will, to effectively make me realize what they're trying to do at the best of to the best of my ability. Lexit Music says, I passed mine too. First one since I started. Again, some big milestones here, guys. Excellent. I'm very glad to hear that. It's always nice when I hear that somebody's coaching has led you to a revelation, and then as a coach you get this like warm and fuzzy feeling, but you also get a very iffy feeling when people are not following the rules and not really making any attempt to change their ways. That hurts us, guys. It hurts, like, like that. Why? Because we're trying to help you, right? We've all been there. We know how painful it is to be spinning your wheels, just not really advancing. And then, you get into the VIP coaching and you have all these lovely experienced people who are trying to help you out. And you're just like, yeah, whatever. I know better. So, make sure to take action based on what we're trying to teach you here. And literally every single coach here is, maybe we all have different styles, but we're all teaching the same thing. Slow down, size down. Slow down, size down. Slow down, size down. The parrot. I need to get like a parrot puppet. Just to kind of hone the idea into something more physical that I can play with. Bob 3 says, hello D, I'm on my 4th day on my XFA, down 441, now up plus 68 for today. Yeah, Bob, a good downside management because you survived for 4 days. How quickly was that minus 441 generated? Was it in a day? Or was it, was it over 3 days? So did you start really slow? Mark Jennifer says, my first time with you. Thank you. Woke up and traded NQ trying to close the gap. Okay, how did that go? I don't really look at NQ much, but I see YM is bleeding. YM is a little bit insane. My choice for this time of day would be DAX, really, but again, we do not have it. DAX is a bit muted compared to YM. Why is YM dropping? That's the question. What is going on with why? Let's see. Some news from the ECB. All right. Russia says Zelensky has categorically refused to make any concessions. Kind of not surprised at that, actually. I don't really see. I mean, yeah, there's some. Okay, but that was yesterday. Russia deal potentially looming. So maybe that's why. But why would it be falling though? It doesn't make much sense. Buy the rumor, sell the news? I don't know. Cliches, guys. Cliches this morning on the Eurotrade. So YM, I don't know. It's just... These candles are so massive though. I mean, it's saying 65 ticks. So maybe if we do minis. Maybe minis. We have some single prints there. Failed to close the gap. Just continue to go down. Limiting risk is a little bit hard. Very hard. Let's plop in YM here. And is NASDAQ following that? Is NASDAQ following that? Yes or no? What is happening? Kind of. Yeah, I would say YM is probably the weakest out of all these. It's got the biggest single prints. So maybe let's formulate a plan for YM shorts. Let's see. All right, Bernard, what's going on? Kicking around bottles this early in the morning. I left an empty water bottle on the floor and he decided to kick it with his paw. Just for no. That's my dog, by the way, Bernard, if you're here for the first time. All right, let's see where the open was. The open was here. Let's put in the marker for the initial balance. Kingdom for TPO profile. But we'll see. So yeah, some single prints left behind. So one of the ways that we might want to wait for this to do something is to maybe wait for a pullback of about 100 ticks here, because the 14 ATR here, actually let's change that to 9, because I think 14 is catching too much of the Asia session. So ATR, where's the ATR? Oh yeah, it's here. Of course. So let's change ATR to 9. Still not that much of a change, 89. So if I get a pullback, somewhere close to the initial balance low, I might do a micro YM trade. Now, YM doesn't have any notable options activity, so that makes things slightly more difficult. But yeah, I would like to see it closer to this former Asia low. And then maybe if there's a continuation, we can jump on that. So yeah, let's monitor these two puppies. And how is that looking on large time frames? Let's just jump through the time frames. So gap close will be happening at 39,363. So you know, a little bit of room there. Not a lot, but still. Weekly chart kind of looking a bit bottomy. Why? Because it's consolidating. Like we haven't actually exited this area. And still bouncing from that massive monthly previously defined high, turned support. Demand all the way down at 35.50, 35,500. And what's the 1 hour doing? Same thing as the 30 minutes. So that's not giving me too much info, but let me just put a line to delineate where the gap close will be. And we always go at the close of the candle. Gap close, gap filled. But we do have a demand conterminous line, as I like to call it. It's basically a point of the market shift when we kind of consolidated, came up, and then that broke. I have a name for that. And that's actually slightly lower at 39,214. But yeah, interesting chart. So let's watch it. If we get some buyers after the gap is filled, and in between that 362 and 214, so this whole area, that could be something to plan things around as well. So demand area, there we go. Just gonna put another marker here. Okay. Can we look at gold if possible? I mean, Joe, we do have Aaron. I'm finding gold kind of uninteresting at the moment. So let me just save this. It's been a very one-sided market with a lot of spikes, like a lot of spikes. I mean, looking at the larger time frame, what do you see? This is where complicating things is not a very good thing. People are like, oh, maybe we can short gold. Yeah, you can short gold, but generally every time the gold market sells off, it somehow finds buyers again. And this is not a new thing. Like, we've been doing this for a while. So any sort of a pullback, to me, it's a dangerous game to play when the chart looks like this. And I would probably more rely on some options activities to see where the market makers are looking at things. So maybe we can have a look at that. Let me just pull out some options. Options. I think Jerome is rubbing off on me. What am I looking for? GCM 2025. Let's see. What are the MMs doing? Mimmers, market makers. What are the mimmers doing? And loading. Here we go. Yeah, so we have some calls at 3,300. So if it drops all the way down there, more call buying, wouldn't be surprised. Don't really have anything much of note around these levels, I'll be honest. It's a little bit iffy. Very weak GEX levels here. Like today, from looking at what they were doing yesterday, we do have some, like a whole bunch of levels sub 3,300. So if we get to like 3,275, it's probably quite likely we're going to see some chop there, because this is going to be hard to break. Very hard to break. But yeah, maybe wait. Like, I wouldn't short down to that point, because we're still very, very strongly above sort of like some statistical areas. I don't know. To me, it all just looks very dangerous. I would want to see either a shakeout first and then maybe some more longs, or like some sort of a structure being created somewhere before I get back into gold. Now, keep in mind that I'm talking about gold from a perspective of somebody who looks for very, very large moves intraday. I'm not somebody who's looking for 30 ticks. Even when we don't have sort of quiet, when we don't have volatility and things are a little bit more normal, I would still be looking for at least 70 to 90 ticks, maybe even 100 to 120, provided that obviously the product in question has more than about 250 ticks on average, that it moves pretty much every single day. Now that we have expanded ranges, what tends to happen is that the moves that we're seeing easily give you like 200 to 300 ticks. Easily. It's like 500 ticks as well. Not unusual at all, right? And because of that, I've expanded some of my targets, and I have been running some copper trades up to like 5R multiples. So that has been pretty juicy, It's been pretty nice to to kind of just not do that much work and kind of just keep going. So here's some of my numbers on this XFA here. Pretty well, not bad. Took a payout from that one as well, and yeah, so it's nice, but I don't look for tiny bits that I can kind of skim and that's it. I look for decent opportunities that have the power to actually go further, not to like not to like be all, ooh, I grabbed 10 ticks. It's like, no, the market is giving you 300 to 500 ticks potentially, right? Find areas that they can handle big reversals, and areas where you have like an exhaustion zone, or you have a big move in the run up to it or run down to it and then get in. Typically, those sorts of trades tend to last for many hours. You know, I like to stay, like if you look at some of my average, was encouraged by Coach Hoop to show my averages. So let's see if I can somehow do this. So there we go. Can you see that? Am I covering that up? Oops, oops. Hold on. Where's my mouse? What's going on? I need to clean my mouse, I think. So my average trades. Durations. 82 minutes. 55 minutes. Average trade duration, 71. You know, I don't like scalping. You know, why would I scalp when the market is providing me with the opportunity to basically go more? I did have a live account. We decided to start over. I've had the live account since like December 2023. And I made a decision to start that again due to some personal things that are going on. And yeah, so I'm kind of building up. You see, sometimes when you're in the live account, if you've managed to kind of prove yourself, like it's a bit of a misconception that that Topstep is like against people going back to XFA. Like if you have something else going on in your life, if you have, you know, a really good, you know, 6 months, and you have over 30 days of winnings, like you can do things to invest that money elsewhere and start again. Obviously, you have to tell the risk team that, you know, if you're a repeat offender where you keep getting to 30 days of you know, over 200 and then dragging all of it down and then going to the XFA and keep doing it, they don't want that. But you know, like they want you to do well, and they want you to kind of invest. Like they don't want you to keep all of that money necessarily all the time in an account. So, you know, whilst it's not good to rinse out things of like, oh, have a live account, 30 days in profit over 200, then drag it down, go back. They don't want that. But every so often, you know, you might want to use the funds to buy something, you know, so you don't, as long as you're not doing it every month, obviously. They're actually okay with accommodating people, and then also people might be, you know, blowing out of live accounts. That doesn't mean you're going to get banned, especially if you kind of try to hang on and you were okay to trade very small size for a long time. They will just go, well done, you know, you've held on for as long as you could, and yeah, that's it. So. But yeah, so let's see what this copper does around this puts. So yeah, a bit of a misconception over how things work on the live level. But it is possible to, you know, with the help of the risk team and stuff, and letting them know what you plan to do and why you need the money, or, you know, sometimes they will even make a decision to go, hey, you've done really well. Like, why don't you maybe drag all of that money down and start again? Like that's been, like I know that there were a couple of traders that were, the risk team suggested that because they said something along the lines of, oh yeah, I've just made like my bills for the whole year in 1 month. And they were like, well, do you want to take this? You know, just cover the bills and come back to the funded level. Like it's, shouldn't be a big deal. So they're not some like ogre company that will keep you they will keep you in shackles if you want to buy something else, you know. People, you know, bash prop firms too much these days. They're very mean. Let's see. What is the best to trade in a 50 account? Micros or minis? Micros, obviously, man. You're working with $2,000 maximum drawdown. Micros. Micros. You have micros. Use them. So yeah, gold to me, a little bit of an uninteresting market because it's so temperamental. Was that in YM earlier? Where was I making all my markings? Here. Okay. All right. Bit of a pullback. Pull it back. So yeah, definitely micros. Let's see. Oh, did I miss some questions? Joe says, have you noticed copper moves very little during the first 3 hours of COMEX, then trends after? Is that something to do with your close? Yes, Joe, you're very right. There is recently a little bit of a quieter period, so you have the initial decision of which way we're going to go, and then you have something called the post-10 cut that typically in some of the other products like including GC, but also copper and crude oil, actually can bring complete reversals of the trend for the day. Now in copper, because it's so directional, it tends to be more of a momentary retrace before it kind of continues about 90 minutes later. So if you're looking to get involved in copper around the euro close, the better. So first of all, that's going to be a smaller trade. It's not going to be like a gazillion ticks that I like to take, but it's going to be, decent enough to maybe grab like 40 ticks out of it, 40 to 50 ticks on a pullback. And then once that happens, you can maybe have a look at more shorts after the euro close into the lunchtime, and then certainly into COMEX settlement, which happens. My time is like 6:30 p.m. That will be, I believe that's 12:30 p.m. Central. I think it's 12:30 p.m. Central, yeah. Oh, I need to wake up. Okay, so more caffeine. Mark says up 9.9k today shorting ES. Brilliant work. Keep that money, mate. Davey says I don't use a dome. I opened, though, yesterday and removed it. What should I do? I don't know what that's. I missed something. Did I miss something? Did I miss something? Yeah, Zed Gomez is correct, because if you take it out, they get funds too. Correct. Yeah, so if it's a live account, it comes from the live market, right? But it's not to say that you will never be in an XFA. But if you abuse the rules, obviously, somebody coming in, generating 30 days of 200 in a live, then withdrawing it, and then going back and then keep doing it, yeah, they're going to be like, well, what the hell, man? Stop being a sim farmer and let's do some real trading. Once you are live, you're not supposed to take out the money too often. But yes, if you do have something that you want to spend it to, just talk to the risk team and go, hey guys, this is what's happening. Or if you're struggling as well, they're like really, really good. Bruno, yes, go get another coffee. I can be all alone for 5 minutes. just joking. Go get another coffee. Let's see. YM creeping up to 39,500. Mo says, the thing I noticed from all of the coaches like yourself is the conviction in your thoughts process and how calm you all are, regardless of how trades are playing out. I think that just comes with time, to be honest. I know that Mike Kozar also said, I want to be calm as you in a trade. And sometimes people think, oh, you're monks, you're not... even if the trade is in drawdown, people are not freaking out, because we've seen it before, and I think mostly it's because our losses are rather controlled on most days. Yeah, sure, we can have a bad day, but there's a limit to the bad day, I think, for most of us who have been around for a while. And I think the amount of cash that you're risking per trade in relation to the account balance is probably the reason for staying calm or staying, unbothered in a trade, I guess. And it doesn't matter whether it's, whether I'm making... Because I have different sized accounts, right? Obviously, I have some personal accounts, and I have new accounts, right? To me, it's exquisitely important that every time I'm in a trade, that I have a measurable thing of how the trade is doing, irrespective of the position size. And this is why you see me trade in ticks. I don't trade in P&L. You can look at the P&L. And in fact, a lot of the times I have my balance blocked out completely, and I only look at it at the end of the week. So that allows me to completely focus just on the process. And no matter whether you're trading like 80 lots or, 1 micro, a tick is a tick. Maybe execution might be different once you get to a certain size, if you ever get to a size where you even need to worry about that. Because let's face it, most traders who are doing exquisitely well as traders basically trade 3 and 4 lots. 3 to 4 minis can bring you quite easily, 5-6K a day. That's like over $1 million a year, right? So anything over that, it's usually because it's either a corporate account, or maybe it's a large prop account, or maybe you're sharing that account that's corporate with multiple people, so obviously more profits need to be generated and things like that. But if you are constantly focusing on the P&L, you will never really get to the point where you're like, oh, I'm just totally chill because this trade is the same that I do on 1 micro, except it's a bigger size. But it doesn't look any different to me when I'm looking at ticks. So yeah, but I also think that the replacement of certain negative behaviors that we've all had to do, are you really a trader? If you haven't made a lot of mistakes and hugged yourself in a corner crying your eyes out at some point. It is a difficult industry to be in if you are particularly emotional. Now, I was never super emotional by nature. Like maybe when I was a kid, maybe when I was like 3 years old. I think that's the case for most people. But then life happens, and your threshold for what should elicit emotional reaction kind of starts getting higher and higher. Then you get into trading, and that sort of skyrockets, where you just realize, you have those memes. It's like, you can't hurt me, I'm a day trader and I trade NQ, right? There's a good reason for it. There is nothing that can traumatize you more than you making mistakes yourself and derailing your standard of living through your actions. It's like absolutely terrifying, right? But after a certain time, you're just like, okay, so let's not size up like lunatics. Let's not rush. I actually have a tattoo on my forearm that says that haste makes waste. And I've lived by that, not just in trading, but in everything that I do. You rush, you create rubbish. You take it slow, you kind of develop skills and an identity shift to be able to reach even bigger goals. And it's not a linear process. You do go up and down, especially in trading. You can run into market conditions that are just not very good for your strategy. That can happen too. And as traders, you have to just weather those. You can't just go, oh, boo-hoo, market is mean to me. You have to just go, all right, so that's not working. What else is working? So that kind of an adaptive nature of every single coach that you see here, and just sheer sheer resilience and sheer refusal to give up in face of adversity. I think every single coach here has that as a trait. And I think we're just naturally like that. Like, you have to be born like that. Maybe you can develop it as well, but I popped into like TopstepTV lobby, Topstep lobby on Discord, and I was just kind of reading through different messages and stuff. Few mean comments here and there. People think that we don't read those, but we do. We see everything. And then I saw, someone saying, oh, I've tried this for 4 to 5 years. This is not for me. I'm finding a real job. And to me, I'm saddened to hear that, because it means that that particular person probably wasn't put on the right path immediately, and therefore they think going back to the safety and going back to the norms is the right thing. Now, I'm not saying that it isn't, because not everybody can be a trader. That is a very big truth. not everyone is good with uncertainty, and maybe some people can never get over their self-limiting beliefs that they reach a point where they trust themselves, because let's face it, most of you don't trust yourselves to make good decisions. So that's a self-limiting belief that needs to be tackled. It's exactly why we have the Neuro Wednesdays with Jerome. We're trying to replace some of those bad ideas that we have about ourselves that were created very, very early on, and then we're trying to replace them with something positive, right? And it's a lot of self-work. It's not easy. A lot of self-work. But yeah, I think that the calmness in positions that you see just comes from the confidence of having seen the same setup. And I mean, if you know anything about me, I'm pretty bloody systematic with coming up with setups, right? To the point that I mechanically know what they look like through a flow diagram or a mind map. I'm pretty sure I've shown some of these before. But yeah, this is how I define setups. This is just like one of many. Something that I was trying to make sure I don't get involved in a trade that isn't absolutely spot on. And I usually like to have about 3 conditions for my star setups. So here's one, here's the second one, here's the third one. Anything else is price action related, like whether we have some levels that could support the idea, supportive factors and all of that. I'm actually doing a lecture on timing trades and making yourself more systematic and defining your setups for my VIPs, probably tomorrow. So I'm going to try and do like the Friday roundup, and then we're going to do a lecture as a part of that. But yeah, if you don't even know what your setup looks like, I would urge you to, do something like this, to create a flow diagram and to just go, what did I actually do? Now, this requires experimentation. You can't just go, I think it's going to go this way. Like, you can absolutely start with an observation that, for example, initial balance low, whenever you have the extension down and you're quite far away from VWAP and you have this big sloping VWAP curve, that can bring further downside, right? And you can just observe without trading what's going to happen at initial balance low. There are a couple of options. Now, whatever happens, you put that in your journal, right? And you write down things like, how did we look like? Let's say that I'm wrong on the initial balance low continuation, and we accept value. So we accept initial balance and go into failed auction, because that's what the failed auction is. Now, some of the things that I like to do in my journal, if I'm figuring out a new setup or a variation on the setup, I will be going, how did we fail the value? Was there anything that gave me, clues that the failed auction is more likely than the continuation? And then you go, well, 30-minute chart showed a 3-bar reversal, and then it failed the auction. If it ends up as a 3-bar reversal, this will be a morning star. What do we have on the 15-minute chart? Well, we had a bit of an inside candle here, so like more of a consolidation. Not the strongest. Usually if the failed auctions come true, they tend to happen via 15-minute bullish engulfings that are much closer to the initial balance. And then, what's the 9 EMA doing? Right now, it's matching the initial balance low on the 15 minutes. So can we maybe get a bounce from there? Or are we going to see the price pick up strength, maybe pick up volume as well, which is not happening yet. We actually have less volume on this second candle. And then see what happened after. So that's your starting point, observation mode. Once you have gathered enough, trades, like let's say you've seen about 20, 30 trades of either a failed auction or a continuation, now you have a little sample size to work from. And then you go, well, let me try on 1 micro to see whether the same thing plays out and how I feel in this trade. Do I feel anxious? Am I reading it objectively? What did the trade look like when it failed? What did it look like when it continued? Which of the two of these options, today's price action, as I'm observing it, looks the most similar. And then you slowly kind of build confidence around your setups. It's a slow process, you know, and nobody can really do it for you. You know, you can't teach people to swim without actually getting in the pool. Trading is kind of the same thing. You can read all the books and watch all the YouTube videos on swimming and do the motions, but it's not quite the same as getting in the water and going, whoa, this is a bit different. Ayush says, I'm up 200% to get on another account. Yeah, that's a bad thing, Ayush. Easy come, easy go, mate. Slow down. Slow down, size down, slow down. Really need to get that parrot puppet. Maybe I should commission Eddie to make me one. Slow down, slow down, slow down, size down, slow down, size. Has anyone ever noticed slowness in Topstep? No, but go and try to change your refresh rate. That might help. Don't go too crazy, especially if you're not on some super high, ultra fast broadband. But yeah, try adjusting your refresh rate. Speed at which data updates is what the refresh rate stands for. IT support, D, reporting for duty. Paul H says, good morning, listening whilst watering my bonsai trees. Very zen, Paul, very zen. Getting centered for the day ahead, yeah. Coach, can you explain the 20% consistency? 20% consistency does not exist. 50% consistency does exist. It's literally this. If you have a target of 3K in a combine, you cannot have any single day that goes over 50% of that. Okay? So if you overshoot, you're going to have to, it's not going to fail the combine, but you're going to have to trade more. Completely pointless in a combine. Reserve the YOLOing big days. Like, look, if it's your style, if it's like swing trading and you just enter 3 micro and quarter massive move, that's okay. But if you traded like 1 to 2 and 3 minis, I actually had someone in the VIP who had a bit of a weird idea of what low lots means. They were saying, oh yeah, you know, I was trading on a practice account, which, you know, is wrong in the first place. And then I was, you know, I made so much cash and I was trading low lots too. And we were like, what do you mean by low lots? And he goes, oh, it was just like 2-3 minis on NQ. It's like, you think that 3 NQ lots is low lots in this environment? Okay. And a lot of my VIP members were like, dude, that's not low lots. It's like, and people were a bit shocked at the statement. So yeah, it depends how you got there. You know, if you got it through catching a big swing, that's fine. On low lots, like 2 and 3 micros. But if you did it trading a mini and you're up 200%, that ain't gonna last, man. I'm just quoting statistics and what I've been seeing through the 3 months of VIP. I started the VIP coaching assuming competence. I think in the next season that's going to change. So, and we're kind of changing how we're running the coaching as well. Right, let's drop down to the 2-minute chart and see. Maybe 100 tick. Maybe 100 tick. There's not, ain't low enough, mate. Maybe 2 minutes. So I'm on a 2-minute chart with the marker for the initial balance. I'm watching how YM is behaving, and we are going to, yeah, copper bloody slow. Look at it, not doing anything. So let's see if we can get some action in YM. I'm going to keep an eye on copper whenever it decides to, whenever somebody kicks it up the bum. And it's like, oh, we need to move. But yeah, I do think the rollover is slowing it down quite a bit. So we need to be a bit mindful. Now, need to use a decently sized stop loss. We have basically 100 points on a 30-minute candle. And I also see that YM has like masses and oodles of ticks per day. Even London is like 375 average, and that's a shortened London session up to the New York Stock Exchange Open. Let me try not crouch. New York has 871 ticks available. It's massive. So we can't be skimping on stops. So low size, wider stops. To give the trade room to breathe. But so far not really seeing much initiation of the shorts yet. So we wait. Copper is at IB high. Yeah, copper pumped at IB high, slightly, but the IB is 32 ticks today. It's so small that it increases the odds of a neutral day massively. You can either have a massive trending day, but only if they initiate pretty early in the day. If they don't, you're looking at a slow start to the day. So that's why I'm not in any rush to trade today. I might need to wait until it rolls as well. This is the whole futures markets thing. Super weird question, but can you be an intraday spread trader? You can, but not at Topstep, because they don't allow spreads, basically. So if you are talking about, using something like calendar spreads, you can't do that with Topstep, because Topstep is a prop firm that wants you to outperform things only in the front month. It's a little bit different. There is a conversation going on in the back end that once you are live and you've kind of proven yourself and stuff, and you're interested in doing options and spreads, you could maybe discuss that with the risk team as a possibility, but for now I don't know whether anyone's doing that, and I'm pretty sure that someone like Dakota would be jumping on that, absolutely, and I'm pretty sure he's had some conversations about that very thing. How does size work in micro euro trade? There's no USD. We have Nonya, we have Euro futures here. This is not, they're Forex futures, they're not Forex pairs. And I mean, for some of them, yeah, it's Euro USD technically, but some of them are not. Some of them are like just the yen pair. Yen is like, in the futures, it's the first quoted currency. So if you look at USD JPY as a pair, USD is the common futures, is the first quoted pair. So it will be like upside down. It would be like complete opposite, and you're like, whoa, yen futures look weird. Yeah, because the yen is the first quoted currency. So yeah, how does size work? In a similar way that the other futures work. There are standardized contracts. I do believe that euro used to be 12.50, I think. Oh, hold on. Bruno has given me a very useful thing here. So yeah, euro $12.50 per tick. If you're trading micros, that'll be $1.25. So just like an ES, although it's slower. The smallest one, I believe, is the pound, because pound is almost like quarter ticks, and it's like 625. 625? Or 625, so half the size of most of the other things. And then micros are obviously really, really tiny. I don't know whether anyone even trades micro. I mean, they must do, because $6 a tick is still a lot. So yeah. Oh, euro is actually 6.25 Oh, that's changed. Did they like cut the tick value? They did. Ah, okay. See, I haven't traded Forex in so long that I don't even know this. So euro used to be an expensive one. It used to be 12.50. Now they've cut that down to 6.25 as well. So now that also moves in quarter tick increments. Yeah, things have changed since Granny D was doing Forex. Christ. Thanks, Bruno. Yeah, so let's show this actually. Let me drag down my screen. Yeah, so we have Euro FX 625. Again, 13 years ago when I went into futures, that was like 12.50. But yeah, pound is also now cheap. Don't see it here. You have Canadian futures. I don't know whether they cut those as well. So I'm going to have to do a little bit of digging just to get myself up to speed over what Forex futures have done. But yeah, it just shows you how much I trade those. Yeah, don't even know the tick size. Let's see, more questions while we wait. All right, we're sort of struggling a little bit here, so just still watching this while I am. I'm waiting for my setup. So we did that one. What am I doing? Okay. Ayush says, what do you mean by slowing down? Well, let's put it this way. If you put in 50 grand's worth, let's kick up the size, shall we? If you put in $50,000 of your actual real money into a real brokerage account, and on the first day or first week, you actually make $100,000 that same day or that same week. How much size would you need to be trading to generate that? Quite a lot, okay? So that tells me the returns of 200 over a very, very small, quick period of time, it means you're oversized. I don't even have to look at what you were doing, right? So it's not just trading less, but definitely trading less size. Why? Because I don't know how much you trade, whether you're a scalper or wannabe scalper, or whether you're more swing trader, what I do. But yeah, if you're scalping and with size and you're doing, full contracts, that's a recipe for disaster. Like I always talk about my risk of ruin video that I did on my YouTube channel, I think about a year or so ago. And you can find it, you can find my YouTube channel link underneath this video. They've kindly put it there. Yeah, find risk of ruin video where I talk about why, things like over trading, sizing up. Like the more you trade intraday with, suspicious accuracy as well, you can get a day when you get really lucky, but you can also get a day where you derail the account completely. So if you start thinking in bigger terms, in like much, much bigger sizes, is it sensible to make 100,000 on a 50,000 pound pot or dollars in a day or in a week, or hey, even in a month? That's like crazy. So all that's telling me is that your risk of ruin is really, really high. And that means the risk of blow up is also really, really high. So, just remember every time you size down, it's not forever. It's there to build up the buffer and to also give you proof of concept. If I've learned anything during the VIP is that most of you don't have proof of concept longer than like a week. Once you have 3 months of solid trading without blowing up, that's when you're ready for an XFA. That's when you're ready for maybe even live. But most of you trade to pass in 2 days, then you get to an XFA, and then the XFA lasts is exactly as long as the combine. That's a problem. That means you don't have proof of concept. It means that you're doing something that is causing your trading to be unsustainable. Whether it's mindset, whether it's size, and usually it's size and mindset. But yeah. Jake says, I've applied for the next draft. Really hope I get in because I'm so determined to make this work. Yeah, we are going to change things next time around. So there'll be some interesting ways of, we're hoping you won't be able to just reset willy-nilly like people are doing now. You're going to have to explain why you need a reset and whether you've been following everything. And then if you don't, we might actually bench you. If you don't want to follow instructions, then maybe that person is not coachable. And in that case, they're just, taking up the spot of somebody who does want to be coached and is willing to make the changes. Whereas in this last season, it's all a bit, I've had a couple of YOLOers who are just not really listening. They're not really in the, they're not doing what we're trying to improve. And I maybe have about 7 people who are super committed, and they have made oodles of improvements during the VIP session and had some really transformative epiphanies, results, realizations about themselves. That's what you want, But if you're going to come in and still YOLO 15 NQs every day and then go down 119 grand, then you're up 109 grand, then you're like, it's like, what? What are we doing here? Avichal says, I think the way to go is to trade 2 to 3 micros across 20 accounts. I found success here. Okay, so 20 accounts. Why 20 accounts if when you put it all the same way? So let's do some math, right? When you're live with Topstep, all of your accounts are consolidated, but here's the thing. Let's say that you get, I know that Topstep doesn't offer 20 accounts. 20 accounts of 50K would be roughly an equivalent of $40,000. So you tell me net, what is the difference of trading, let's say, 20 micros versus trading 1 micro in each of those? I'm waiting. There's no difference. It's all in your head, okay? It's still the same money. You're still, when you have a loss on the day, if you lose 200 by 20, you're still losing 4 grand a day. That's not changing. You're just fooling your eyes to think that, oh no, it's only 200. But all you're doing is just never allowing your mind to adjust to trading bigger size. And believe me, it takes adjustment and then some. People are absolutely fine trading micro accounts, but then, you get them scaled up too quickly. We saw this in prop firms all the time. You come in, you trade 1 mini, because back in the day there were no micros. And then you have good 1 month. And suddenly, and in the prop firms that I worked for, they had like an old school model where 20% of the profits, if any, are paid out to you. Some of them are recouped for the desk fee, which in my case was about 3 grand a month. And then you would have, whatever rest of the money was in the account to scale you up quickly for the next month and the next month. And they were pushing size. So whenever you had a good month, they would push size. So some people were completely just falling apart by month 3, You go from trading 1 to then trading 10 to then trading like 25. And then you get to like 50, 80, 100, and you're like, oh my God. And then you start having execution problems and people break down, So yeah. But you're fooling yourself by not allowing your brain to adjust to trading bigger size. And you're just thinking that you're trading peanuts. And that's possible now because you have certain companies who are offering 1 million accounts. But can you open 20 brokerage accounts? No, at least not without a very good reason why you want to have sub accounts. You can maybe open 4 or 5, maybe one to trade different strategies, but you will still need to give a reason as to why you want to open multiple accounts. Like, for example, we had multiple accounts with IB because we were running algorithms and we were running different algorithms. And that was a valid enough reason because we weren't running algorithms all on the same account. It would be one account per product or one account per algorithm, right? But yeah, so be very careful of sim farming that way, because I've seen people who are like, oh yeah, I'm making a ton of money. But I have seen also, you put those same people in a live account with massive sizes that they are trading, and they fall apart because the mind is never, they've never actually gotten used to trading with big size and managing the positions with big sizes in one trade, or scaling in, scaling out. Like, that's a skill in itself, right? So whenever I hear that, like, it kind of makes my skin crawl. And then some other people see that who are beginners, and all they see is dollars in their eyes. Oh wow, I'm going to be doing that. And then they spend like $3,000 upfront cost, which is a lot of money, on activation fees, passing, whatever, resets and everything. And then they fail with the full 20 effing accounts in like the first week. So where are you now? You're down $3,000. You're $3,000 out of pocket. Is that a good thing to be doing? So please just don't, like, I'm really against copy trading for anyone apart from the most advanced traders who are, there just to scale up and they know how to manage risk. Everybody else, if you've been trading for, 6 months, 7 months, a year, just manage one account well, man. Like, everything else is just smoke and mirrors to make you think you're trading peanuts and then getting over the psychological pressures that real trading actually carries. It's like, it's okay, it's 200. No. On a bad day, losing 200 a day, it's a $4,000 loss across 20 accounts. Yeah. Ayush says, last time I blew my account. Yeah, here we go. I blew my account trading 10 times of my usual size, failed to handle the fluctuation. Like, just this statement, Ayush, it just tells me that you are not really tackling the real issues. So you need to start tackling the real issues here. What could be the point of a trader to increase position size? If you could please suggest some ways to know the time to go for big size. When you've had 3 months of trading small size and you're consistent and you've taken at least 3 payouts in that time, and you also didn't have massive days where you wipe out like 90% of your count in one day, then you will have a buffer. And then that buffer presents the bankroll management, which is another skill that we have in prop, not really talked about much, where you determine whether it's the right time to take out 20%, 30%, or 50% of your account, or maybe even more. Let's say if you've gotten a massive, buffer over a year's worth, and now you maybe want to buy a house or something, and then you're looking, well, actually, the $50,000 could go towards the down payment for an apartment. I'm going to do that. But how much does that leave me in the account? Oh, that leaves me with $20,000. Is $20,000 enough? Should I size down after such a large payout? The subset of skills of managing the account appropriately without blowing up. Like, how much drawdown does your system have over those 3 months? But people want to go from zero to hero yesterday, and that's what their P&Ls look like. If they look like a zigzag chart. Instead of, maybe a bit of a drawdown, slide up. Maybe a bit of a drawdown, slide up. Smooth P&L curve is what you want. You don't want too much variability. So when you achieve that, you can size up. Bryant wants to know, how do I get the yellow volume bars on the side of my chart and how do I read them? This is volume profile, visible range. Here it is, VPVR. It's probably the default. Maybe I changed the colors of POC or something, but I think for the most part, it's just a default VPVR indicator. I use it to find low and high volume nodes, but I also use the supply and demand for that too. So I kind of combine the two concepts into one. All right, still no rejection reversal here, but I don't like the little wicks that it's doing. It's unclear what this wants to do. The morning star that we had, so just to get back to analysis for a second, the morning star that tried to fail the auction finished right on the nose underneath the IB. And let's have a look whether the volume profile can be of any use. I don't think so, not today. So basically what you're looking for in the volume profile, you can probably see it better on this copper chart, is to see where the low volume areas are and where the high volume areas are. What is the implication of that? Low volume areas can bring you reversals. They can also bring very quick moves through the area, but on the first try, they usually reverse. You can see that here. So this is a low volume area. So let's delineate that. Low volume area. Low volume area. Anytime you run into a high volume area, so basically think of these as kind of like supply demand levels, right? You can kind of use your eyes for that by going through different time frames and seeing why there was low volume there. But a volume profile is a vertical histogram that allows you to see these levels very easily, right? Okay, so it looks like YM is attempting to accept value. And then volume profile also has this concept of point of control, which represents the widest point of the profile. Now, whenever we're coming in from Asia into London, you typically have quieter time where profile builds a lot of volume in a single area. I am not really in favor of using those as reversal points because it means a lot of the time in a lot of the traders, the products that we trade, that it's happened out of hours. Anytime you build profile with basically a random walk where it doesn't really go anywhere, it's just like building structure in one area, I don't like to see that. But when you have RTH, regular trading hours, and you know, so much volume going through, and yet they are not able to reverse, they're not going anywhere, and that builds the volume POC, I will use those as reversal points because it means despite all the market makers, the entire world trading, everybody trying to get in, they are not able to break through that area. And then you will see, you know, a high volume node, high value, high volume. What am I trying to say here? Higher value, higher probability, high volume node. Say that 10 times fast. Bob the third is saying, this is my 6th XFA, failed the other 5 times. I'm doing my best to hold on to this one, up 1,416 for 4 days green now. To which Bruno says the 5th day curse. Very mean, Bruno. But yes, there's a behavior there, Bob, that you need to replace. So if you've blown up all of the other ones, go and see what day you've blown up on. I also know the curse of the Bruno is talking about, the 5th day payout curse. You get to the 5th day and you blow it up just before you're eligible for a payout. I used to have another one where I would get a payout and then I have a bad day right after. But not like a terrible day. I would just have a drawdown day. So now, knowing that, I try to start that post-payout day super slow. You know, I try to go, okay, I know this is a pattern that I must break and replace with something better. So now, why don't I trade small? Like really small. Let's start trading with like 2 micros or something rather than going to minis immediately. And that worked. You know, it worked for me to basically replace the bad behavior. And then, you know, you do it again. So you get another payout and you apply the same line of thinking. Okay, now we need to make sure that, we, who's we? Me. I need to make sure that I don't, have a bad day, because that's definitely something to do with me rushing, right? Oh, let's get back in. Let's get back to, $6,000 or whatever, $7,000, whatever the bank balance was before the payout. And that would cause me to blow up. Now, I also know that taking payouts too quickly, which is not my problem, but it is a problem I see across the board, where people are considering the $200 minimum for a payout for 5 days the right time and the right way to manage bankroll. But again, let's do a bit of math. Keep in mind that when you take the first payout, your maximum drawdown, wherever it is going to go to zero immediately. So whatever bank balance you had, and you're thinking the maximum trade is going to stay, it ain't staying. After the payout, the maximum drawdown goes to zero. Don't know how many people are aware of that. So the idea behind $200 or more for 5 days is not to have the minimum, right? It's like people are so extremists. They are like, oh, you can pass in 2 days. I must pass in 2 days. It's like, you don't have to. Chill, man. It's the minimum, right? So just because you can take a payout after a minimum $200 in profit for 5 days, what is that going to do to your bankroll? If you only have 1,000 in your effectively account, your bank account, and you take 500 out, what are you left with, considering that the trailing goes to zero? Just realized I had some mascara on my hands for some reason. Like, wash your hands, Dee. Have a wash. So what are you going to be left with? You're going to be left with $500. Is that a good way to manage your bankroll? No. So the idea behind the 200 minimum is that you have more than 200 per day. So that when the payout after 5 days does come, you actually have a few grand in there, right? Not just like $1,000. So, going back to the idea of being able to generate more cash is, to have something that looks maybe not like this, but at least to have maybe 400, 500, 500, and then maybe one day of 200 or 300. So to have more than basically what is available to draw down, and not to like put your back against the wall and then start panicking and then ultimately lose the account. So yeah. And so don't be an extreme must get payouts in 5 days with a minimum amount that you have for a threshold, and don't be an extremist in trying to pass in 2 days either. Just because you can doesn't mean you should. Deruma trades learned the Kelly criterion. I would disagree with Kelly criterion positioning. It's applicable in other things like poker and stuff. I find that applying Kelly criterion to intraday trading, especially if somebody's a scalper, it would basically require the trader to know the probabilities, ins and outs of each of their setup, and then to basically assume that that's going to work out most of the time. And I've seen some of my colleagues who have tried to use the Kelly criterion, but yeah, maybe managing bankroll through it is not a bad idea. Because that, you can take a quarter out without a problem. But, I've seen traders trying to apply Kelly criterion for actual intraday. Again, still waking up here. Work with me. My brain just doesn't operate. It doesn't matter how long I've been awake. Or I am one of those late chronotypes. So my brain only starts kicking into gear around midday. So yeah, I literally read that as, Kelly criterion for intraday trading. No, Kelly criterion for bankroll management, D. Duh. So yeah, apologies. Yeah. Is bookmap any different from volume profile? Well, bookmap has volume profile on the side, and in fact, so does the dome. Like if you look here, this is the volume profile, but you know it's not very it's not very clear of how it looks. Let's go to something. Yeah, so here's copper, and that's literally the same thing, same information displayed over here, but on a very, very granular level. Bookmap shows you real-time orders going through, what's going on with real-time volume. Basically, bookmap is visualization of the time and sales and volume, all smushed into the same thing. But it's not, it's not a replacement for volume profile, because volume profile is in the past. It's like it doesn't necessarily print in real time. It's like what has happened already, and then it just creates a vertical histogram with a few more details that maybe wouldn't be obvious but just by looking at pure volume. Because you know this is a horizontal histogram, right? This volume, and even though you could try and kind of imagine where the holes were, somehow visually it's much easier to do it through this way. I prefer the TPO profile. You know, we have initial balance, we have you know, the single prints, we have the idea of day types, you know, which can give you a very good idea of what's going on, even if you are a scalper. Davey says, what's moving the market, y'all? Tariffs, Trump waking up, Russia, ECB, whole bunch of stuff today. Let's have a look at the calendar. I think we have a couple things. Oh yeah, we have unemployment claims. Yeah. Oh yes. Who's breathing and walking? Oh, it's Astrid. Are you hot? Maybe? Let's see. Bob says, D, is that with any payout? Yeah, I took a payout out of that account that I just showed. So obviously balance is less because I took a payout. Sonia, I don't really know what's going on there. You're fighting a battle there with yourself, because I don't know what's like. You keep retracting your messages. Is that because the MIB is going to come and get you, or using the algorithm? Like, why are you retracting your messages? Like, what is up with that? Like, we've got some tinfoil hat thing going on in here. Yeah, Deruma trades, you have to know your win rate for sure. Most trade like 1/3 or 1/4. Yeah. It's a lot, right? Yeah, so far no setups, guys. Like, I'm trying. I'm looking at two things. Copper slow, platinum futures flat. Let's have a look at natural gas. See, this is where I need multiple screens when I start dragging out multiple products that I trade. Let's have a look at nat gas. No, not interval. Product. See what there's something there. Starting from the daily. Down, down, down. Still holding previous day's low. Okay. Bit of a movement in a 4-hour chart. We have some put supports at 3 evens. Nat gas is rolled. I'm gonna have to okay, so no nat gas today because it's literally just rolled into a new contract. So I need to give it time to develop. Is this why I'm a short? No, not yet. Yeah, it's very muted. I suppose they're waiting for the unemployment claims, you know, so us doing gung-ho trading here might not be the good thing. There was a yeah, there was a pretty good movement in Asia, and now we've kind of just settled into nothingness, settled into slow. Joe is asking, can we call copper a failed auction, or do you like to call it a neutral day? It's neither a failed auction nor a neutral day. So for a neutral day, we need the extension to both sides. We only had the extension on one side in C period. Was it a failed auction at the time? An iffy one, yes, but usually failed auctions are not this wiki. They will try and hold it above and then maybe go down and accept it in the next next TPO, so next 30-minute candle. This one usually brings, like whenever you see a wick and then back down, it most of the time statistically brings a possibility for a slower auction higher. And for a neutral day, we would have had to have an extension lower. This is now a sustained auction. A sustained auction, okay? I do have that as hypo 1, okay? I do have it. So maybe we can try that for the end of the stream here. Whoops, no, that's MYM. Oopsie. And stop loss, 37 ticks inside. Yeah, inside the initial balance, underneath the most recent demand area, and somewhere close to the puts. Not the most ideal stop loss placement, but considering I don't have that much space upside, this is like barely a 1-to-1. So usually if I'm not, like for example, I'm not going to do an XFA trade here because I don't have enough space. It's only barely over 1.3, 4. I want to have more space for my trades to work out. So really I'll be looking at this area for shorts, and then I can kind of swipe it all the way down to some of these bigger areas. But yeah, we've held above. We tested the demand. Look at it. Testing the demand. And popped back up. So now, you know, if you don't get a follow through, you don't get a follow through. But it is the setup. Sustained auction. Vital says, hi D, is it time to tell a funny story from your trading experience? Well, I don't know how funny it is, but one morning I'm walking into the office, you know, standard time, 8 a.m. And there's a random dude sleeping on the sofa in the office with his boxers right next to the sofa. So I was like, okay, that's new. So anyways, I kind of ignore that, walk in, go all the way to sit at my screen. When I hear giggling in the back office, where usually the boss was sitting, one of our risk managers who also owned the firm. So I was like, who is in that? They're like this early on, like, you know, this is like very early, right? So anyways, I go to knock, and there's one of the traders with some random chick doing God knows what. They obviously, so a lot of us were given keys, you know, to, or like access thingies, like cards. And you could access it like 24/7 because we had some people work in Asia. But yeah, it looks like a couple of people decided to go back to the office and had a bit of a party, which the boss wasn't too happy about. The trader in question was completely drunk out of his skull. And the girl was also pretty drunk, but probably not as much as he was. And the dude on the on the couch, from what I understood, was her boyfriend. Like, I don't know. So yeah, that's the prop firms back in the day. Is that a funny enough story? I don't know. You decide. All right, so it looks like we have a little bit of movement here. This is typically a case when we have a quieter start to the London session. We kind of generally have this like weird moment of 3 hours of not doing anything, and then it starts moving just about the time when I'm finishing my stream. But also, when you look at some of my performance metrics, that is the time when I usually do well, like sort of between 12 to 4 p.m. my time. And for copper, it's actually from 11 a.m. So that's exactly now. But yeah, should I let this run? I might let this run and see what happens to it. That will be the trade for the day. Sustained auction to try and get to the value area low as a mean reversion trade, which was the hypo from the beginning. You can see that on the screen. So we wrote that at the beginning of the session. Is it a crystal ball? No, it's just data and probabilities. Whether it gets there fully or not, or whether it just kind of makes a partial attempt, that's a whole different thing. It depends on how quickly the market makers plow in, whether there's increasing volume, and whether we run into COMEX in the next session and the next release. That's it. Yeah. Trading Nicholas says, funny enough, yes, maybe more embarrassing. Yeah, luckily not for me. I didn't do anything. I just walked in on people. I thought it was funny, but yeah. Okay, let's finish up this session. You will see me, I think, later on today. I need to check my schedule, but usually I'm on for like lunchbox trading or something like that. You will see me hang with maybe JD and maybe Dolby. I don't know who I'm on with today. Maybe Eddie, it'll be good to see the guys. That's basically my social for the week. D doesn't go out. Let's throw some links. I mean, we're still trying to get this Eurex into Topstep. So let's keep begging for the Eurex. Maybe if Topstep becomes an FCM, can we get Eurex then? Like, I don't know. I'm hopeful. Where is my Discord link? Now, if you are looking for trading buddies, if you're looking for the recordings, yeah, Lenny, I'm not sure. I think they were kicking around some ideas on maybe emailing the links. I know that some of us have done it in like our own looms and then gave the VIP team the links to that. I don't know what's going on. Let me see if there's been any movement. So no, the decision has not been made yet. But they're working on it. They're going to see what sort of repository they're going to have for all of those. But yes, there will be a recording for those of you who have missed out on the first mindset sessions. Marcos, yeah, I know. Let's keep bugging them. I'm going to keep bugging them. I am. I mean, I love DAX. Everybody loves DAX. Now, if you want to come and join us for one of the segments on Topstep, please fill out the casting call form, which I just posted. And also, check out my links as well. They are right below this video, so you can find my Twitter, which I'm not very active on, but find my YouTube, which I'm also not very active on. I know, it's riveting, right? But I do have a lot of... Sorry, I just made myself crack up there. I'm trying to figure out where I'm going to take my YouTube channel. I've gotten kind of increasingly sort of annoyed with a lot of new YouTube channels that are popping up on the same sort of thing. Like, we live stream daily and we shill and all the prop firms. I am trying to think up of what I'm going to do with my YouTube channel. I know that I've always brought value, but I think I'm going to try shifting it to maybe, using some of the tools like, maybe, Edgewonk, Edgeful, book map, you know, something like that, rather than being like prop firm centric per se. So I'm kind of like figuring out how that is gonna work. I'm about to move to a new house, so you know, some of the craziness that I've had over the last sort of year in my life with, you know, trying to renovate the place, trying to sell the place, and then kind of move, that's coming to an end, and I will be able to kind of manage my time in a slightly better way. So yeah, but check out my channel for all the other videos that I've done over the years, because I have been doing them since pretty actively since 2020. Even though I've technically been on YouTube since 2015. If you go back long enough in the videos, you will see my very first YouTube where I'm super awkward with a massive purple hair. And yeah, I have some very useful links underneath each of those videos, so check it out. It's very useful stuff about profile, order flow, supply and demand, general issues that the traders face, you know, how to recover after big loss, how I recovered after some of my Muppet moments, and, you know, just generally humor and not being too serious about ourselves, and not over dramatizing losses and wins as well. That's it for me today. Thank you so much for joining me. It's been a blast as always. Not too many trades, but hey, we're in on one, so yay. I will see you later for the main broadcast. Typical, it's just jumping now. Maybe we should start the Euro trade at 11. We'll trade a bit more. Yeah, so I will see you next week if I don't see you later. And yeah, that's it. This has been the Euro trade with myself, Marcus Talker D. See you next week. Take care.